Okay, well, thank you so much, everyone, for joining us today for this GreenKite Compliance Resilience, How Regulation Can Empower Your Firm for Good Growth webinar. So this is the third webinar in GreenKite's Growth Resilience and Everyday Excellence series. And so far, we've looked at what resilience means operationally and otherwise in today's market. We've looked at insurance, data and ESG. And now we're looking at compliance and its pivotal role in good growth. And all this in the context of the FCA's PS 21/3, which takes some saying if you haven't got your teeth in, which sets out final rules and guidance on new requirements from the FCA. Now, they point out that these requirements were developed working with the B of E and the PRA. So for their perspective, this is a concerted effort to materially improve operational resilience across the whole of FS. So we think because this applies to insurers and SM&CR enhanced firms, we think the majority of firms in our sector will be directly impacted by this. And because the requirements also cover all third-party activities, to one degree or another, this will impact everyone. So let's meet our panelists. You can see from the holding slide that we have joining us today is Sarah Ager, founding CEO of GreenKite, Maurice Rose, who's a senior manager at PwC, Hannah Peng, who heads up compliance for Lockton, and myself, Sian Milley, as your facilitator. Very glad to be with you today. So just a couple of bits of housekeeping. Please stay muted as always. Please do use the chat function for any questions that you might have, and we will try and get to those questions during the course of this discussion. It is an interactive discussion. This is not a series of presentations, so you're hopefully going to have going to be witness to a really interesting conversation today, but also do feel free to give us your observations and questions, and if we don't get to them in the session, we will be following them up in the follow-up from GreenKite. So I'm going to kick off by asking each of our panelists today to introduce themselves to you through saying who they are, what they do, and also why they think this is such an important topic, why they're here today with us. And I'm asking them to also share with us their top line take on the important questions and issues that they can see in the implementation. So who am I going to go to first? Yes, I think Sarah, I'm going to come to you first.
Oh, thanks, Sian, for giving me the short straw. Good morning, everyone. Pleased that you could join us again on the third of our webinars focusing on operational resilience, a topic very close to all of our hearts within GreenKite. My background, as some of you may know, is a lawyer, and I look at sustainable growth in business from a good governance, good compliance that doesn't curtail business experience and growth. So for me, operational resilience and the recent paper from the FCA is really, really crucial. We've got some tight deadlines to work towards as businesses here in the industry, but we also have various themes and definitions of what operational resilience looks like, depending on what regulator is focusing on us. So this is going to be a busy time for firms. For me, operational resilience, it's all about everyday working practices. It's about building an organisation which can deliver long-term growth, but doing that in a safe, controlled and sustainable way. And having the right compliance and control frameworks around that growth and those working practices is absolutely key and crucial. So that's why I'm here today. So thank you, everyone. And I look forward to the discussion.
Okay, thanks, Sarah. Hannah, if
Hi,
I can come
everyone.
to you.
Hello, I'm Hannah Peng. I'm head of compliance at Lockton Companies. So I'm a compliance professional. So of course, regulatory publications are always going to be important to me and interesting to me. But I work in a business of insurance professionals, and I consider myself to be an insurance professional too. So on paper, my job description, probably similar to a lot of you who are in compliance in the audience, is something like ensure the business complies with FCA and other requirements. But I think when you're a regulated business, your whole business is intrinsically linked to regulatory requirements, to the point that you can't really say, over here is my day job as an insurance professional, but somewhere over here is the stuff that I have to do to tick the compliance box. And if we only have a business, we only have a business if our business meets the need in the market, i.e. the need of the customer. And if we want to keep our customers, whether they're individuals, consumers, large corporates, we're only going to keep their business if they're treated fairly. So the topic of operational resilience becomes really important. and we must ensure our businesses are able to keep doing the job come what may. It's especially important when you understand that a core part of the day job is getting things right for our customers and business partners. Okay. And then in terms of issues and implementation, I can see the phenomenal effort that's required for successful implementation from across all key stakeholders in the business, because implementation of this paper isn't something that can be done effectively by a compliance or risk person sat alone in their office with a blank piece of paper and a large mug of coffee. It actually requires engagement of the whole organisation. So I can see a real challenge for firms where compliance isn't involved in everything that it does, and where the rest of the team don't see their responsibilities in the regulatory framework.
And a short deadline too, right?
Yeah.
As well, to get all of that done. So thank you, Hannah. And Maurice, if I can come to you, please.
Absolutely. So thanks for having me here today. So I'm Maurice Rose. I'm a senior manager in PwC's insurance regulatory practice, predominantly dealing with clients in the London market, probably driven by my background, having worked in the London market for a number of years now. From an operational resilience perspective, it's very much the hot topic at the moment from all regulators, whether that be the PRA, FCA, also as well more widely EIOPA, the European Central Bank, Lloyd's. It's very much on the top of everyone's agenda. So quite rightly, the FCA have issued this publication, and we'll be focusing on it and looking at in detail and with scrutiny as to how it's implemented and firms' response. So in terms of what operational resilience means to me, so operational resilience means to me the ability to operate under severe but plausible scenarios. So a big part of what compliance and risk professionals will be doing in terms of implementing this paper is to look at those stress and scenario tests that will determine what is an important business process and how those business processes will operate within a stress scenario. Also as well, for an operational resilient perspective, it's important to identify the key processes, the key people that are implicated within the firm, and also within the third parties that support and supply these firms as well. Yeah. And that comes on to Sean's original point in terms of this is probably more broad than those firms directly regulated. By the FCA.
So Maurice, we're going to dig with your help actually into some more of those issues now, and actually I take a slurp, because I'd like to just dig into you from your, because I know you've got enormous experience actually across many different types of firms and in many different kinds of roles that you're fulfilling in helping those firms to understand and get to grips with what they need to do and know about themselves as firms, right, as well as to fix stuff. So I'm really interested, from your perspective, what do you think good growth looks like, Maurice?
So I think good growth is growth with the end user and customer in mind, also as well ensuring the sustainability of the business model and continuing to operate as well within the complex regulatory sphere that we all operate within as well. Many firms, when it comes to, for example, creating new products and being innovative, they don't necessarily have the compliance angle in mind. And therefore, for good growth, I think it's important that all aspects of the business are integrated, from product development through to compliance, risk, and all aspects of the business when considering what growth looks like and where new products are being created, new markets are being entered into. It's really important that for that good growth, every aspect of the business is considered, all of the aspects of the business are consulted to ensure that the growth is sustainable and also meets the requirements of the customer, but also as well of the regulators, which are, as I'm sure we're all aware, starting to show a lot more interest in this particular topic. Yeah.
So listening to that, Sarah, that definition of extensive definition, I don't think we'd argue with any of that. Absolutely. But is there anything else that you'd like to add or observe on that definition of good growth in the 2020s? Is it different, for example, to what has come before in your experience? Because you're also vastly experienced. I'm not meaning to say that you're old, obviously, but you've been around long enough to have seen various iterations of what good growth looks like, right?
So, I mean, I would like to I mean, I support Maurice and everything he said. And I think what is really, really key and pivotal is that good growth and regulatory compliance aren't mutually exclusive. And I think, you know, any operationally resilient framework, it needs to be predicated on clear and accurate, you know, the business need to get together and really identify what the critical operations are and what the critical and key business services and processes are. And that is a cross team functionality, as Hannah said. Now, that's what the regulator's asking us to do. But actually, as a business, that's not something that lots of us are used to doing, because we're quite keen and experienced at working in silos, whereas to have an operationally resilient framework requires input and kind of cross-functional support. I think it's worthwhile noting as well that just because you're, and I've always said this, and I'm a massive advocate for this, just because you're regulatory compliant, that doesn't mean that you can't grow and you're not a successful and profitable business. The regulator doesn't not want us to make money, but they want us to make profits, but not to the detriment of the customers and the society we serve. So if, when we look at the new regulatory requirements about putting this operational framework together, we do it badly and we just see it as another tick box exercise and another piece of admin that the regulator wants us to do, then it's just going to add complexity to our business and it's not actually going to add any value. I think if we look holistically at what the regulator is seeking to achieve here, it brings with it benefits for the firm. So that includes growth and profitability. If we do it right, obviously it drives efficiencies. It's going to lessen spend on having to remedy any resilience issues around the business. We potentially can improve our operational efficiency, reduce our cost and our spend. When we're looking to buy businesses, then if we understand our own business fully, then we can integrate new acquisitions, bring in new products much more timely. And actually, ultimately, if we're looking at our customer when developing new products, as Maurice says, then we should improve customer retention and longevity of customer and performance, so they come back to us for ongoing service. So I think this whole thing around operational resilience being filling in a form and hitting the regulators' deadlines, obviously that needs to be done, but actually it needs to be a comprehensive review of the business by all parts of the business.
So yeah, really interesting, thank you. I mean, so much of that sounds like, but yeah, isn't that what we should have been doing forever? And it is, as someone that came into insurance from outside, God knows how many years ago, 13 years ago and counting now, you know, that connection between doing business in the right way and growing your business and growing your profits is so obvious. And yet here we are still talking about it, right? Mm-hmm. So Hannah, when you were basically setting out your stall for why it's important and why compliance is such, you know, a natural partner for business growth, clearly that's what you think. Yeah. From your point of view then, good growth, pretty obvious, really?
It's interesting you say about sort of coming in from outside the market, and I don't know if that's a non-regulated sector into a regulated sector, but it's you say it's like common sense and surely we should have been doing this all the time. And I think there's just this sense of maturing into what it means to be a regulated sector, which, you know, the regulator has seen some change going through, you know, from the FSA and into the Twin Peaks regulation that we have today. And if you look at the trends or the themes of topics that the FCA has covered, I feel like this question almost encapsulates everything in the two elements, so operational resilience and good growth. So the first strand, I think, and the focus to this point in time has been the good growth piece and looking at product governance and quality. And quite often when people are doing peer reviews and file reviews, they have two questions in their mind. One hand, they're asking, what's the quality of this contract, or what's the quality of this deal? And on the other hand, it's what's the compliance around the contract? And actually, the compliance elements should also be feeding into quality. So good product governance should lead to good quality, which should lead to good quality, sustainable, profitable growth. And then that sort of takes us into this second phase of regulatory focus, which is sort of operational resilience and really being ready as a business. So not at a product level, but at a business level, being ready for anything that could happen and from external situations, so that the customers really continuing to experience the service that they need through changes that impact the business. And ultimately, an organisation with a successful focus on operational resilience will operate, grow and service its customers better in the long run. Yeah,
it all makes complete sense to me. And I love this idea also of thinking about it in terms of maturing. It was a non-regulated sector as it happens. It was actually business to business publishing that I came into, which has its own stresses and strains, believe it or not. It's not a particularly easy or glamorous route to make money in. But that maturing process. So when you talk about that, Hannah, do you mean the firms being helped to mature in a regulated context, or do you think it's the regulator maturing somehow in what the expectations are and aligning that, I guess, to changing expectations in society, right? Because things have moved on from the 70s quite significantly, maybe not as far as we'd like in some areas, right? But there has been that kind of change. I mean, so just that point of the maturing.
I think it's both. I think as a sector, financial services is maturing together with the regulator. And I think when the FSA split into prudential and conduct, the FCA really had to challenge, well, what is our role now and what are we looking at? And we've certainly seen a change in approach from the sort of arrow style visits going into organisations, looking organisation by organisation, to looking at themes that are common across the whole market.
Right.
And I think that has had to be responsive to public opinion.
Yeah. Maurice, any thoughts on that? Because you will have seen and observed that change as well, presumably.
Yeah, no, absolutely. I think it's both the firms and the regulators. I think both are starting to take a more holistic view of risk across the organisations and actually what's driving that. And I think there's been quite a lot of focus from a PRA FCA perspective of joining up the dots between different functions within organisations and what that means, the interconnectedness of it all. So, you know, I remember being at the PRA and the shift towards more thematic reviews and feedback, looking at things more holistically and actually understanding the interdependencies between functions and risks across organisations. And in order to do that, you know, as a result of that comes a better understanding of the organisations and also the resilience that results from being able to join up those dots. I think historically, a lot of insurers, carriers have worked in quite siloed environments and teams, and therefore where a risk has presented within a particular area or function, it hasn't necessarily been flagged appropriately or actually identified as something that could be systemic across the organisation. And I think from a regulatory perspective as well, that's been mirrored, where a regulator has done a specific targeted review in a particular area of the organisation and hasn't necessarily joined up the dots. But again, I think that is certainly changing, and it's recognising that this risk assessment process from a regulatory and firm perspective needs to be enterprise-wide and cross-functional.
Yeah, it's really interesting, actually. Or we could talk all day. I mean, I could certainly listen to you guys and ask you questions about that all day, but I'd like us to move on now to one of the specific areas, obviously, that this guidance, this new set of standards and requirements with, as we've said, you know, quite a short deadline actually in financial services time anyway, is around, you know, those super disruptive, the things that we couldn't potentially imagine, but obviously it's risks business as a sector, right, to imagine risks that no one else has seen or priced or mitigated or managed in the past. That's what we do, right, for a living, for other people. And this guidance is talking about the kind of really disruptive scenarios being ready for that. And also, as I read it, basically saying, yeah, we did, on the whole, insurance was a really resilient sector during the pandemic and is continuing to be great. The lights stayed on and we did a good job, but that doesn't equate to being operationally resilient in the face of disruptive scenarios going forward in the 2020s. Obviously, climate being one of those, but a whole range of other disruptive scenarios. So I guess the question is it any easier now to have those conversations in your business where it matters, which according to the FCA is at board, because that's where they're expecting these conversations to happen, right? Is it any easier now to be doing, I don't know what the catastrophic version of blue sky is. Maybe it's dark sky thinking about these disruptive scenarios. Hannah, is it any easier to have those conversations? And has the COVID pandemic and experience helped to have those conversations or not, do you think?
Yeah, I think maybe the phrase is black swan thinking. I'm not sure. So, well,
I'm going to get a bit pedantic now.
Let's not get pedantic. Let's do.
And that's coming from a compliance person. I'm back in my box. I am back in my box, Hannah.
Okay, it's just an idea. I'll stop having ideas. I think it's better that we don't think.
Have more, Hannah. Have more.
So I think the pandemic has made scenario planning more mainstream. I think it no longer sits on the fringes of the board agenda. You know, that sort of scenario where it's the time for the annual test in the board planning standing agenda, and you get some guy from IT that comes along and talks about a disaster that he's thought up, and everyone sort of rolls their eyes. But when you're walking into a boardroom to discuss scenario planning with executive management, there's always that balance that needs to be drawn between fully exploring a disaster scenario on the one hand and maintaining your own professional credibility on the other. And I think before 2020, pandemic response plans would have looked something like, you know, is there enough cleaning products available? Have all the staff, is there enough PPE for all the staff in the office? But I think very few plans would have considered whether their staff would all have to work from home 100% of the time for over a year. And, you know, for some of us, offices didn't reopen last autumn. So there are some people who haven't been back to the city since before the 17th of March 2020 or before. But scenarios still need to be plausible. And so it's that balance between, is it plausible, but is it really a true disaster event if it's still within the realms of plausibility?
Yeah, that's a really good point, isn't it?
And I think the other thing to consider is that we actually survived the pandemic pretty well. Yes, there've been some losses, and the FCA business interruption test case definitely wasn't a high point in the life of the insurance industry. But in the vast majority of cases, businesses have survived and they've actually done pretty well. Employee engagement is probably up as executives and management have been proactive in communicating with the workforce. And I think the employee wellbeing and mental health agenda has come ahead years because people have sort of had to talk about it. And I wonder whether the effectiveness of our resilience in the last year actually is a bit of a hindrance for us because we have done so well. You know, if we've survived this, we can survive anything. Right. And also, I wonder whether sort of talking about alternative disaster scenarios, you know, I wonder whether people actually have the emotional resilience to throw themselves fully into disaster planning so hot on the heels of such a big event that, you know, is going to affect us for years to come. And I think that's really key because it's been bruising for the last 12 months on so many levels, and people are tired and want to get back to the business as usual, not another sort of scenario. Yeah. So I think it will be key to have the, you know, the champions that help drive it through, a really good implementation plan and shared ownership. And the shared ownership, because you need the business insight and knowledge, but also you need to be alongside your colleagues in thinking about what the future disasters could look like. Yeah,
really interesting actually. And that emotional resilience point, if we could call it that, is a really key one actually, isn't it? Yeah, and I just to say, it's something that I always you know, completely humbled by the emotional resilience that colleagues in claims, for example, whatever kinds of claims they're dealing with. I mean, they're dealing with people's worst day, all day, every day, right? As a job. So, okay. So thank you so much for that, Hannah. Sarah, some thoughts then on, Hannah's talked very eloquently about yes, in some ways it is easier, but in other ways it might be giving us a bit of complacency. There's going to be a mental exhaustion. Can we stop talking about bloody disasters, please, for 5 minutes? Gosh. Your comments on that, Sarah. Is it easier to talk about? Has it really moved up the board agenda?
So I think when Hannah made passing reference to the individual themselves having to deliver what could be plausible or defined as plausible scenarios which seem implausible, that is a really key and crucial part here. I think the support and the sponsoring from the exec team for the individuals that have to do the scenario planning and mapping is key and crucial. I think senior execs need to be lead and own this whole topic jointly as a board agenda item, but then be supportive of individuals whose day-to-day job is to kind of plan and prepare for these topics. Too much time spent boxing this as a compliance exercise needs to be avoided, in my view. Do
you think it still is, though? So my question is,
well,
do you think anything has really changed at board level in terms of being able to have these conversations without, as Hannah talked about, you know, risking personal credibility of the person that's talking about stuff that's never going to happen?
I think at board level, absolutely, there is the freedom to have these conversations now. The difficulty, I think, then is the next layer down where we have to evidence our compliance, because it's very difficult to not have an Excel spreadsheet where you scenario test and map and rate and regulate as evidence. Conversations, I think, still occur at board level. You'll get a CEO calling another CEO, I'm sure, where they ask about what they would be doing in this scenario. But how do we minute that, and how do we record that we're having those conversations even though they are occurring? And I think that's what Hannah hinted at, that that this is happening, and we did actually survive a pandemic, and the implausible became plausible, and we actually coped quite well. So were those conversations already being had? I think the answer to that must be yes, but was it recorded in an Excel spreadsheet? I think the answer to that must be no. So I think there has to be a happy medium about how we react and respond to the new regulatory requirements. But I think anyone that focuses on it as a compliance exercise rather than a business exercise is very much mistaken, and will be caught out at the next hurdle while other firms are maturing, and indeed the regulator continues to mature and ask more probing questions about the businesses we run.
All right, well, we'll finish off the webinar in a couple of minutes with your guys' views on what you would expect to be seeing or what you want to be seeing for yourselves as professionals or in other firms. But Maurice, coming to that question then, your observations would be, are you going to have a lot more work even than you already have, Maurice? Because these conversations are happening at board, but they need people like you to help them.
I think they are certainly happening at board level, but I think there's going to be a shift in the sophistication of those conversations and the level of challenge. So if you take, for example, COVID-19, the pandemic, many insurers are quite well versed at modelling pandemics. However, often where they fall down, it's around the return period and the plausibility of that scenario. So is it a 1 in 200? Is it 1 in 1,000, 1 in 20? Those sorts of conversations, I don't think the boards have necessarily historically been able to challenge effectively. And similarly with the underlying assumptions as well that feeds those scenario planning exercises. And the regulators, through what they're looking for in terms of the evidencing, they're looking for organisations and firms to plan effectively to run stress and scenario tests, but then for the board to challenge those effectively and be able to deconstruct them and say, actually, have you used the correct expert judgments? I'm not quite comfortable with that return period. What are the underlying assumptions within that scenario that you've been used? And that's what the regulators will be looking through in terms of their minutes that will be potentially submitted to the PRA or FCA through review or review activity. So it's that challenge from the board that I think is critical, and I think that's something that many boards have woken up to in terms of their involvement and oversight and level of sophistication, the expectations around that, that has happened. So I think, you know, I agree with everyone in terms of we have weathered the storm quite well from a COVID-19 perspective, but actually I think if you start to get onto the bonnet of many of the scenarios, of the stress and scenario tests and the assumptions, were they quite right, or actually were we quite lucky in terms of, from a capital perspective, the insurance industry is very well capitalized, but actually how those scenarios were modeled, is the capital model taking account of the pandemic, or is it actually just an arbitrary load? That, I think, you know, will be coming under scrutiny in the weeks and months and years to come.
Okay, thank you very much. So some really interesting thoughts and perspectives there from all three of you, and particularly, I mean, loads to run out there. And of course, again, I could say Hannah's going to laugh at me at this because I could spend another hour talking to all three of you about digging into that, certainly. But I think let's get practical then. Faced with actually what is quite a sort of big wodge. I mean, I'm not a compliance professional, but I do like wading through this type of regulatory stuff. I think it's important, but also it's a bit of a challenge. I started to really understand it, Hannah, the second go through, which I think is not bad actually. But thinking about, you know, putting myself in the shoes of people who've actually got to kind of get to grips with this, Sarah. Who and what should be taking what kind of actions on the basis of this and the basis of the deadlines? Impact tolerances, as we've talked about, important business services, you know, where's the place to start? What would you be advising the people that GreenKite deals with as their sort of first steps here?
So I think, well, firstly, I think lots of firms are actually part way through this process anyway. I hope they've started it, because timelines are incredibly tight. I think, you know, what you need to have is a clear and common purpose and vision for your firm and what that looks like. You need to go through and identify what critical services you have, and you should be rating them as the regulators ask you to do. But I think you need to look at the wider impacts of that service disruption and what that will create for your business. I think it's important that you have board, and I would urge non-board members discussing and debating this. Most of these business critical services are actually managed on a day-to-day basis by more junior members of the team, and actually they are much more aligned and attuned to some of the problems and the issues that could arise. So there needs to be cross-functional and cross-hierarchical, if you want to call it, or cross-level discussions whilst we're scenario mapping or planning out our business services. I think the importance is that we need to be developing the right culture that can bed in these requirements. We need to make sure that our policies and procedures around remuneration and incentivization are reflective of and supportive of our business and its good growth. And they are some of the wider, more holistic areas that actually the regulator is trying to get at by asking us to scenario map and plan. I think we need to have better oversight and control of outsourced services. So I think increasingly firms do outsource some of their key business services, and
we know it's a primary engine for growth, particularly in delegated authority, right, but across the board. So,
and I think unfortunately historically there has been by some firms a regulatory tick box, but nonetheless somewhat laissez-faire ownership and management and oversight of outsourced providers, where it's like, well, if they do it wrong, we can come after them. We know the regulator doesn't want us to adopt this approach, so we need to take those outsourced services as though they are our own and properly manage them and have clearer lines and responsibilities and scenario map some of the issues of that business getting in trouble, I think, for us to be fully operationally resilient. I think this is only the start of us discussing compliance and operational resilience. Maurice has already said that there are many regulators, but numerous firms within our own business arenas have now, with Brexit, multiple regulators to whom they must respond and report. It's not clear at the moment that there is any one route to demonstrate resilience at a regulatory threshold from any of these regulators.
So are you aware of something that defines it in the way at all, or in the way that the FCA has, Sarah?
No, so the FCA define it, and I think the UK are fortunate in that the FCA and PRA have been at the forefront of operational resilience and providing some kind of definition. But it is principle based, but all regulators are relying on their own definition and evidencing.
But if the standard is high enough, then this could be the standard. So if you could meet this, you could argue you could meet, let's say, yeah, it could be. Okay, thank you.
But at the moment it remains unclear, I think.
Okay, good points, thank you. Maurice, practically, what do you want to see? What do you expect to see? What are you hoping to be able to help people to do as this sort of clock ticks down to March 2022?
So yeah, I think with this paper, there's a lot of text, but not a lot of concrete answers, which unfortunately is the case with much of regulation, and a lot of it's open to interpretation. So I think what's going to be key here is for the ability for firms to evidence how they've arrived at the outcome that they have arrived at. So for example, the identification of important business or critical business services. How has a firm, and what process have they gone through to identify those, is just as important as the actual list that they come up with. Similarly with the tolerances as well. Why and how is that tolerance appropriate, and what back testing or scenario testing have you done to validate that? So it's about the process that you use to arrive at the the list of services, but then also as well the validation of that, and the regulators will be looking to understand that process that you've gone through to arrive, but also to validate the services themselves and the tolerances. I think the point around third-party providers is really interesting. It's very, very clear that firms cannot delegate their responsibility for the oversight of these critical business services. Ultimately, they are on the line for this. And I think also as well, they've linked it into the SMCR regime as well. And we'll be looking to hold people to account here. So I think there's certainly going to be increased interest from the likes of the COO functions within these firms because of their critical role here with regard to operational resilience. So
you think the COOs in the front line then, do you? With the CRO and the Chief Compliance Officer stood right next to them?
I think so. I think it's a combination of all, and I think
don't you think, Maurice, that's one of the points here, isn't it? That the CEO is on the front line, but actually has to be supported by the CRO and the head of compliance or Chief Compliance Officer. Because, and I think that's... And
the COO, as Maurice was saying. So sorry, Maurice, just finish your point.
But what I think we will start to see more of is actually the regulators pivoting their focus as they have with other functions. So if you take, for example, what the PRA has been doing with regard to the CRO letters, the CEO letters, the chief actuary letters, they've been taking an issue within the market, but actually pointing SM and CR at different avenues and highlighting that senior management function's role with regard to those issues as well. So I think over time, we will start to see operational resilience through different lenses, through different SM and CR key function holders as well. But I think it's something that definitely is, it's high up on the agenda from the PRA, FCA, even from a Lloyd's perspective in terms of their market oversight as well. And so I think it's something that's here to stay and is only going to become here, hopefully more embedded. But also as well, I think it's important to stress that this shouldn't just be a tick boxing exercise. I think we said at the beginning, firms need to realise the value in this as well in order to actually embed, but also as well to get the support from across all levels of the organisation to implement it and make the changes as appropriate.
Yep, great. Well, Hannah, we know you don't think it's a tick box exercise,
Absolutely
right?
not. Absolutely.
So you've had the action list, the diagnoses. from Maurice and Sarah. What are you thinking as you sat there listening to that?
Well, for me, the so what is really for regulated businesses to realise that compliance is the life breath of their business. And I think what that means for me is not just me being really egotistical, saying compliance, ahead of compliance, I'm the life breath of the business, but compliance with a small c, that, you know, people with regulatory responsibilities and people subject to the conduct rules and anybody that contributes towards a regulated business activity, compliance has to be at the heart of what they do. And I think I mentioned earlier that sort of disaster recovery and business continuity plans have often been considered like services delivered to the business by risk or compliance. But this operational resilience paper has to give us a complete 180-degree change in mindset, because the response has to come from the business itself. I think it's about engagement and joint ownership. And whilst compliance might do the exegesis of the document for the business, it's for the business to own and implement. And, you know, Sarah mentioned this as well. It's about incentivizing the right kind of growth that builds the right culture within our organisation. And it's that kind of culture that ultimately leads to sustainable, profitable growth, and not just a bigger book of subprime mortgages, for example. Because products should perform as they're expected to. And the FCA's focus on culture, conduct, and together with the shift towards the focus on operational resilience will build a sector more like a trampoline that will still bounce if it loses one or two springs, rather than a brick wall that will subside and become unsafe if it loses a brick or two.
So I buy all of that. I'm, you know, my opinion actually is a facilitator, shouldn't count for anything at all. But I get that. But what do you think the chances are, all three of you, and I'll start with you, Hannah, are you optimistic that we won't be having the same conversation as one of our delegates, Gary Burke, has just said, that compliance is considered as a bolt-on rather than woven into the fabric of the business? Let's say 2 years from now, we come back. No, actually, March 2022, when these things are supposed to be in place, we come back. Do you think, are you optimistic that we won't be having the same conversation about where compliance sits? Hannah?
Well, I think it really depends what organisation you're in and what the culture of that organisation is. I'm confident that I'm not going to be sitting here having the same conversation, for sure, where I am. But I think for some organisations, compliance is seen as a bolt-on, and I think that is becoming outdated. And I think it is a mindset that we need to challenge. And I think it's harder and harder and harder for businesses to really keep saying that sort of thing. Okay.
Maurice, are you optimistic or pessimistic?
I want to be optimistic. I can guarantee we will be having these conversations. I think, you know, a lot of what we've talked around today isn't new. And I think that's testament to itself that, you know, maybe this is formalizing it somewhat more or articulating in a slightly different way with some additional requirements, but a lot of it isn't new. And so actually, based on that, I'm not overly confident that we won't be having these conversations a year down the line. I think what is interesting, though, is it's certainly being given more focus and more airtime. There is more concrete guidance around what the expectations are, not necessarily how to get there, but there are more specific outcomes expected of regulated entities. Yeah. And I think that as a result will drive, you know, hopefully compliance, but hopefully compliance, you know, in a good way that isn't just tick boxing or putting some thresholds in place. It really does need to be embedded into the organisation. So I think that for me is the challenge. It's not necessarily the compliance, but how you get there and evidencing that compliance.
Yeah. Sarah, optimistic or pessimistic?
Well, I'm always a bit of a pessimist. Unfortunately, Hannah, I'm going to side with Maurice. I think we are going to be having these conversations a year down the line. However, I'm slightly more optimistic than he is, because I actually think it's a good thing that we'll be having these conversations 12 months down the line. I think you've said exactly where we are, Hannah. Some firms are realizing that you can't have compliance just sitting on the fringes of your business and are fully ingratiated. I think it's for those firms that realize that that is an outdated, outmoded way of running your business, to demonstrate that the true way to grow and prosper in financial services in the UK is to ingratiate compliance within your business. It is part of your business. It is your business. You are regulated. Compliance shouldn't be about a tick box exercise. It's not the capital C, it's the small c. And it's getting everyone to buy into that to grow properly. So I think we will be having these conversations. I'm glad we'll be having these conversations, and these conversations are hopefully will be developing and moving on as they have been in the last 24 to 36 months, as I think there has been a wakening up of lots of people within the industry that we do need to change and to be reflective of the society we represent.
Thank you very much. We're slightly over time. Sorry to break the promise to our delegates. I'm sure all of you've got, you've given us 45 minutes of your time and you need to go now. So on that note, can I just say a heartfelt thanks to our panelists, Hannah Peng, Maurice Rose and Sarah Ager from GreenKite. And just a quick advert for the next GreenKite webinar, which will be on people resilience on July the 14th. So thank you very much. It's been great having you with us. See you again soon.
Thanks all.
Thank you.